Right, we are on 14.1, uncollectible accounts receivable. Okay, so an uncollectible account is just an accounts receivable that we don't think we're going to be able to actually collect on. A bad debt is just another name for that uncollectible account. An allowance method is just a way that we estimate what we think our uncollectible accounts are going to end up being, and we put those into a contra account. Book value is just the difference between that asset's account balance and its contra account balance. Right, so then the book value of an account receivable is just the difference between the accounts receivable and the accounts receivable contra account, which would be the allowance for uncollectible accounts. Okay, so then our net realizable value is the amount of accounts receivable that a business is expecting to actually be able to collect. So it's pretty much the opposite of our uncollectible account. Our net realizable value is what we think we're actually going to be able to collect. Right, so there's two ways that we can calculate our uncollectible accounts receivable. The first is the percentage of sales method, where I just take a certain percentage of my sales that I think are not going to be collectible. Then I also have a percentage of accounts receivable. I just take a percentage of my accounts receivable that I think is not going to be collectible. An aging of accounts receivable is just a way that I can analyze my accounts receivable based on when they are due. Okay, so now we are looking at an estimate of uncollectible accounts expenses, and these are being calculated based off of percentages. So we're looking at the accounts receivable and we're calculating what we think is going to be uncollectible based off of a percentage. So our current percent is just 1%. So we look at all of our current accounts and we just take 1% of those that we believe are not going to be collectible. If an account is 1 through 30 days past due, we believe that 4% of those are not going to be collectible. Right? If it's 31 through 60 days, we believe 12% of those ones won't be collectible. 61 through 90 days, we believe 30% of those ones will not be collectible. And then if it's over 90 days, 80% of those ones probably will be uncollectible. Okay, so then to calculate what we think is actually going to be uncollectible, we just take those percentages times whatever the total for that period is. So when we take all of those percentages times the totals, we will end up with $2,509.25 that we believe is not going to be collectible. Okay, and then right below that is what's already in that uncollectible account. So right now there's already $125.15. So to get up to what we believe the estimate is going to be, we subtract the $125.15 from what's we believe should be in there to get what we need to make an adjustment for. Okay, so now we would need to make the adjusting entry to get that allowance for uncollectible account to the point where we think it should be that $2,509.25. So we need to make an adjustment to hit that allowance for uncollectible account for the $23.84.10 as a credit. I need to make a debit entry into my uncollectible accounts expense for that exact same amount. Okay, once I figure out my T tables, I can bring that down into my general journal. Okay, so we are on the Work Together 14.1 on page 417. We need to calculate our uncollectible amounts and then fill in our general entry. All right, so I calculate my uncollectible amounts by taking the amount that's in my account receivable and multiplying it by the percentage. So I'm taking that $485.18, and I'm multiplying that by the 2%. So that's going to give me uncollectible value of $329.70. Okay, I'm going to do the exact same thing for the rest of my period. So the 1 through 30 days, I take my amount and multiply it by the percentage. So I will end up with $499.56. My 31 through 60 days, I take the amount times the percentage. I will get $556.65. My 61 through 90 days, I take the amount times the percentage. I will get $843.64. And then I will get $2,209.97. Right, I need to total those all up to figure out my total uncollectible. So I will get $4,439.52 for my total uncollectible. Okay, they told me that right now I already have a balance in that uncollectible account of $236.89. Okay. So then to figure out my estimated addition to that allowance account, I just take that $4,439.52 and I subtract off that $236.89. All right, so I end up with $4,202.63. All right, now I need to do my adjusting entries. Okay, so I'm doing these as of December 31st. All right, I'm going to have to hit that uncollectible accounts expense. And I'm going to hit the allowance for uncollectible accounts. Okay. My uncollectible accounts expense is a debit for the $4,202.63. And then I have a credit in my allowance for uncollectible accounts. Okay, and I have completed my journal entries.